Well, good day, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for the evening of Fed Day. It is the 18th of September, 2024. Now, we're going to get a lot of news again tomorrow. Let's start there, and then I'll go into my analysis of the Fed. You're going to get the Bank of England monetary policy decision at 6. You get jobless claims at 7:30. The Philly Fed Business Activity Index is going to come out at 7:30. The Conference Board is going to release their monthly leading, coincident, and lagging indicators at 9. Existing home sales data for August comes out at 9. We're going to get the morning report on natural gas storage, what the guess is on that. Then we talk the Fed. So I'll let you read that and I'll just speak over it. The Fed came in at 50 basis points. So I was on the wrong side of that. But as I said, it didn't matter which one they did. And I was very clear about that. One of them was the more conservative approach where they could have easily gone 50 basis points, November 6th, the day after the election, and then go further in December, or they could go up front bigger. And the message from that is that the Fed is no longer fully data dependent. It's a mixture now of forward looking. When asked the question, and they were asked, had you had the revision in the jobs data prior to the July meeting, would members have gone for a rate cut at that point? And then the Fed didn't have to catch up. And the answer from the Fed chair was maybe. We didn't get it, so we don't know. All right, so that tells you they didn't have the data. The second part was he didn't want to say, well, we caught up with this, and it's not catch up, it's what we think is appropriate. So the Fed expects the jobless rate at the end of the year at 4.4%, the Fed fund rate median at the end of the year in the neighborhood of 4. I don't even know if that's right. Yeah, I guess they are. They're doing jobless rate and Fed fund rate about the same. And that is right. I double-checked that. The Fed funds rate median at the end of next year, 3.4, and they hope to be under 3% by the end of 2026. So that's the important parts of what they're doing. The rest of what he talked about is the pace of the economy, but he made it very clear the victory on inflation is not over, so the Fed keeps looking at the numbers, but the concern is about the jobs market, because if they don't want to get into a situation where a lot of unemployment, and if they're looking at a jobless rate at the end of this year at 4.4 and you're 4.2 right now, they're obviously anticipating that October, November, December is going to see where these numbers jump a little bit. 0.2, nothing dramatic. And the important point, and he said it, and I think this was very, very great, these are low numbers at 4.4 if you go to history. He doubts we're going back to the 3.5 numbers that we had right after the pandemic, and as people were just getting jobs and nobody'd let them go, and you saw that. The Fed members are judging inflation goals and employment risks roughly in balance at this point, and they still have their 2% goal. So I've given it to you. Now, the change of the market is going to happen like this. We're no longer going to say, when is the Fed cutting? Now the question is, do we get another cut at that meeting? And if so, how big? So you have to adjust your thinking in the market. This is the beginning of a cycle that goes the rest of this year by the Fed's definition, all of 2025 and into, at some point, 2026. There'll be jumps between 25 basis points, 50, and possibly none. No cut. But I've got my doubts about the no cut. The question is, how do we get each year down to a certain number? And that could be just how they do it. They go 25s, and then they go, well, you know, we're not going to go for a whole year 25s. That would get you down maybe a little too fast and too far. So in their thinking, somewhere along the line, as I analyzed it, I said they got a pause or two that they're building in, and that's what I think will come about, and the markets will gamble with that. The interesting part is how the markets finished up today. At one point, they all rallied on the news, and what I had told everybody in my written reports was the algorithm traders were going to take over this market, and boy, did they ever. Once the report came out, I got seasick in my chair watching the market swing to the upside, the downside, the upside, the downside. It wasn't just limited to that. The bonds and notes were under selling pressure the whole way through. Traders had anticipated this. They got what they wanted. And I repeated, I said it yesterday, buy the rumor, sell the news. You're getting that. You're getting that in BND and the other markets. That is what is typical. The dollar index did go under the 100 level, and then it ended up with a late day run. Okay, I came out for my clients of the market. Now I'm ready to re-enter, and so I'm excited about what's in front of us. Uranium got that number I was talking about. Would the market go up, make a high, reverse, get under some numbers? We'll show you that in a minute. AMC, we just haven't talked about it, but it's down to 475. I can't believe anybody'd want to own this, given the dilution that keeps going on. And unfortunately, this isn't the best time of the year for movies. You have to get into the Christmas season. You get some bump in it for Thanksgiving. It's the Christmas season. And then after that, folks, you die. I can't make it any clearer. So be careful. I own the movie theater. I know that game. If you've gotten my gold report, and remember, it's on our website. I don't know what time today it goes off. It won't be on the website beyond a certain hour. I guarantee it's off today. And remember, in order to see it, just go to the website, iraepstein.com. Either go to the research area, or probably before 9 tonight, you'll see on the top left, and that's 9 p.m. Central Time, I hope, that you'll see where it says the gold report. Take a look. The market is doing pretty much what I thought it would do. So far it's paying attention. NVIDIA coming down, Boeing down today as well. And what Boeing did is interesting. They took the people that are still working, those not on strike, and they said to a large chunk of them, we have to save money as a company. We don't have anybody building in the plant anyways. You're going to take a furlough, non-paid. You want to keep your job? That's how it's going to work. So tighten the belt. Buckle in. The union said that they didn't like how the first set of meetings this week went. They're asking for 40%, and they didn't see any movement on the part of Boeing. It's too soon. The movement will happen probably next week. And as I said, you start off, can they go to 28%? Then you goose them to 30. Maybe you can end up at 32. We'll see. I'm not part of that conversation. We'll see just what goes. So, remember, I'm going to run this through tomorrow, and Friday I want to do something other than Visa. Now, I did write the person on YouTube to write me about this, or call into my office and they'll put them in contact with me, and I have a gift for them. You could be the next gift. What do you want me to cover? Start writing tonight for the markets you want me to cover. I'll take a look, and as long as they're things that people might follow, okay. I get so many requests for things I've never heard of, I give up on it. But Visa, you went up, made an all-time high, backing off. Now, I saw some companies come out today, and it was interesting on the call, that they are now backing away. They think that this has gone up high enough at this point. They could be right. Again, nothing but good news, and you're down 1% today, backing off, but the trend is still up. I don't see it changing. Higher lows, higher highs. Why did it drop there? Didn't quite get to the Bollinger Band, so it just picked that area to pull back. Now get ready and be careful. If the red line closes under 79, the odds are strong that before you go up over that high, you're going back to wherever the 18-day average is, probably be around the 281 level. So be cautious with that. Rivian, I might replace this now. It's getting down to where I wanted you to think about it. I thought you would get back into the Bollinger Band and the 100-day average. 1303 is the 100. You got as low as 1282, and the Bollinger Band's 1267. I think I've done my job. So maybe it's time we look at a few other things. TMS might be one of them. I don't know. In CrowdStrike, I think there's more sideways action. That's one of the things I've been telling you. Uranium, what I just said yesterday, doesn't mean I'll be right, is that if this market starts breaking down and gets under 25.18, and closes under the 18-day average. And I want you to see, it got to 25.03, it closed 25.18. Until you take out, now it's today's high of 25.89, you've opened the door for the Bollinger Band again. So doesn't mean that that'll be wrong. Now, let's assume you take out today's high of 25.89. The odds are then strong, you're going to 27.34. So you're at a real tricky spot, but I think the bears took control today. In Dell, you're up to the numbers that I'd be very careful with. You hit a Bollinger Band, you're overbought, professional money often comes out of the market. Linn, why did the home builders come down? Well, this is because they've been going up on this idea that rates were going to fall, and when they finally get what they want, you put all your money in there, and you look at the market, you saw it rally to 192.40 against the Bollinger Band, and it didn't go. A lot of traders come out. That's what I think went on. We want to see the market on corrections and then look to be buyers, okay? Because I do like what I'm seeing there. I like here, it's the same chart pattern as Linn. They're working the same way. Then we get to the financial services, and this is so interesting. Here the market gets exactly what it wants. The Fed goes aggressive, 50 points, and you're down on the day? Huh. So until today's high's taken out, since it's an outside day down, the odds favor you're going back to the 18-day average. And if you take that out, I still think you're only going to the Bollinger Band to fight a short-term battle. You're fighting that battle in XLI. How often do you stay over the black line? 5% of the time. That does not mean you go short there. The market is in no trend. It's overbought. You've got a lower low and a higher high. I'd let somebody else want to own that. Then we get to XLE, and as I told you, the market lost its bearish embedded reading. I thought it would go to the 18-day average. I couldn't be more pleased. It did exactly what my work said, and out you go. In GLD, so gold should have liked all this. Why? Because the cutting of interest rates, the falling of the dollar initially should have been bullish, and the market did rally. It went to 240.29. And then you started coming down. And this is a pretty big reversal. You had almost a $5 break from high to low. You closed near the low of the day. You've opened up the pattern of momentum turning down. You could easily go in back where I said in my gold report. Now, maybe I should stop talking there. Go look at that gold report. Now, the next big play I see is silver. I like silver. And I think that the silver market had a bullish crossover today. The 18-day average got over the 100. So I think this is going to be your big support area, and that's where I think traders will look for the market to go down to, base out, and see if they can get in. I wouldn't play the long side yet. It's still overbought. There's downside momentum. You don't want to pick up that falling knife. Let it base out. Be careful of copper. If silver failed there, this could be where the copper does. But I'm going to repeat. Cutting of these interest rates, especially a big first cut, has got the Europeans going, yes, the Fed's in the game. I don't know how the Bank of England will respond tomorrow. While tomorrow also the Bank of Japan starts its monetary policy, we'll see what they do on Friday, all right? And I hear it's a toss-up there as to what they might do. I don't know how the Bank of England's going to do. I haven't seen anybody talking about it. But I'm looking for market on a pullback here, 41.62 to 44, to help determine what the next move is going to be. Then we get to TLT. Well, it did all it had to. You've turned down, you lost your bullish embedded reading. I think you're going back to regroup against 99.21. In the dollar index, you ended on the downside and you came roaring back. First challenge of getting down there. You hit 27.96. Remember, that Bollinger Band will change intraday. I was watching it. It just went right by it, 2 cents lower, and came roaring back in the market. That does not mean you're in an uptrend, but you ended that wave down. And as you can see here, you got to 103.27. Excuse me. Didn't quite have the power to keep going to the upper band and a reversal down. Look for the market to now come to 102.45 and fight a battle. In the end, I think the dollar lower again. I think the euro higher off this kind of news. So you put it together, you come up with game plans. And I'll have them for you. One of the things I do is at 9 in the morning, I start recording, and give you strategies on the spiders, the ETFs, and the stocks. We cover a lot of territory. We're going to cover 40 charts at a time. You'll see names here of some that we cover, but I rotate them all the time. Your subscription also entitles you to write me personally and ask me, hey, I got an idea on this. Can you tell me what you see on the chart? And I do respond back to it. I create a short recording, typically about a minute long. We do it. I've increased from 35 to now 40 charts on this, so I find that interesting. Technical analysis, the fundamentals, then you're going to get the daily charts, and then on the weekend, the weekly charts. But more and more, I mix the two during the week, and I show you what I'm seeing on both. The charts will look like that, and as I said, we cover just so much ground. So how do you go about getting this? It's simple. You just go into the research area of IraEpstein.com. You sign up for it. It's all listed there for you. It's pretty easy to do. We will be sending you user ID password. You're going to get our QT app for your phone. I text messages in America as to when I put out the update and send emails. So everybody's covered on it. You can move your cursor to the top. There'll be an icon to get this, and/or IraEpstein.com, and away you go. So I'm Ira. I want you to have yourselves a great trading day tomorrow. I'll catch up with everybody first thing in the morning. Be good.